How much of my privacy am I willing to give up for the convenience? Okay, well, I'm going to start this video out a little bit differently than I do with my other videos. Hello, all of my past, current, and future investors. This is an article for you. Now, many of you guys have heard me say before, cryptocurrency cannot be uninvented. It will never go away. Once cryptocurrency came out of the box, guess what? It's here forever, my friends. But here's a nice article for all of my investors. The implications for investors. The title that I made here is Crypto Cannot Be Canceled. Cryptocurrency cannot be canceled. Implications for investors. And this has some contextual relevancy to our times. That's kind of the point. The recent vote in the European Union to, in effect, ban proof-of-work cryptocurrencies via the markets in crypto assets framework from being traded and used within the trading block can be viewed in two different ways. Now, this is a big deal when it comes to the news that has been coming up recently. On the one hand, the fact that such a vote ever made it to a serious contention shows just how outdated and incomplete the analysis of crypto is by policymakers. Conversely, the reality that this proposal was voted down demonstrates that the outlook for crypto has improved significantly versus previous years. So the point is crypto regulation is coming and going. Some of it's really ignorant, but we have just enough super people and superhumans out there and people who are knowledgeable about crypto to help shoot some of these bad ideas down. But here's the point. As the crypto asset space continues to evolve and create new iterations of products and services, it is important to take a broader look at both the outlook for Bitcoin and the regulatory assessment process that will influence this outlook. Let's say, for example, with non-fungible tokens or NFTs and central bank digital currencies or CBDCs, occupying ever-increasing amounts of mindshare, it is tempting to shift the regulatory conversation to standardization, reporting, and auditability. Now, that being said, and fully acknowledging how important these factors are for the continued growth of crypto assets, Bitcoin and the recent actions in both the United States and the European Union raises several issues to the proverbial front burner. We have to take a look at some of these issues that are coming up. Now, you guys know that I generally try to stay out of the political arena because, frankly, I'm an operator and I build stuff, and none of that stuff matters to me. But we have to take a look at some of the few issues that have been under recent scrutiny that crypto assets have around crypto assets. That's the point. And the specificity and the specifics of cryptocurrency in these arguments, right? That's what matters. It's the crypto specifics that matter. Whether it's the debate of the use cases and applications of Bitcoin versus other crypto assets, the valuation of non-fungible tokens, NFTs, or the implication of CBDCs, the fact remains that crypto assets are assumed by many to be equivalents to one another. That's the problem. Everyone sees cryptocurrency as just this blob. It's just as one big blob. This could not be further from the truth, which should be understood by both policymakers and investors. Like any other financial instrument, each individual blockchain and crypto assets should be assessed and understood by its own underlying merits. Even though proof of work, or POW, has been under scrutiny for the environmental cost it allegedly produces, and you guys have seen my videos on why that's not true and just is a farce, which is, entirely another issue on its own right. This consensus methodology delivers significant benefits versus other methodologies. These include, but are not limited to, the immutability of this methodology, the ability of participants to participate in truly peer-to-peer transactions, and the globally distributed nature of transactional processing. No consensus methodology or type of crypto assets is inherently superior to other ones. And while proof of stake has its positive traits, it is not inherently superior to POW. Either way, each crypto asset and the underlying blockchain should be objectively assessed on its own merits. Crypto is at a very significant tipping point, and it's important that we understand these things. Someone else that should be understood as a Something else that should be understood as the regulatory conversations and debates continue to be waged as it connects to crypto assets is that blockchain and crypto assets are increasingly at a tipping point. On the one hand, are proponents of Bitcoin, or at most semi-centralized crypto assets and others that are support the centralized options such as CBDCs, the future of the asset class and ecosystem is being decided right alongside the global ramifications of the recent pandemic, red-hot inflation, and the sluggish global economy. A question that needs to be asked as part of this conversation is what approach will ultimately survive, a decentralized approach or one that is led by nation states and other centralized institutions. One need just look briefly at the implications connected to centralized crypto assets, which is what I've covered, guys, so many times in the past couple weeks and months about this Russia and Ukraine stuff. It's showing the true colors of the risks associated with centralized systems. Maybe the custody that you gave over of your crypto assets is problematic. So there are positive and negative things to both sides of this argument. And if we compare the opportunities and risks presented by decentralized options, see how complicated this debate has become, really. But decentralization brings with it an uncertainty, right? A volatility, but also brings opportunity, where centralized options purported stability, but also the trappings that can come with centralized command and control structures is problematic, right? And so there's a balance. We're always choosing between two things, right? We're always choosing between two things: privacy and convenience. How much of my privacy am I willing to give up for the convenience? Being really private is not convenient, right? So, what do we have? What do we have at the end of the day? Let's continue on. Money is essentially being redefined. Money in its current form might seem to be permanent, but the reality is that the current form of money, the fiat currency issued by central governments and not connected to any commodity or external asset, has only been the baseline form of currency for the last 100 or 150 years. Hard money, or money backed by physical assets, or at least able to be traded for physical assets, had historically been the dominant form of currency the world over. With governments across the world printing and issuing large amounts of currency, some would say excessively, there are significant questions being asked about the future of money. Setting aside that for a moment, the questions that have been raised with regards to stewardship, or lack thereof, linked to fiat currencies, the following simple fact must be recognized. Money is equal parts technology and financial asset. That is what it is. Technology and financial. Money is just not financial. It's technology too. Like any other technology in the marketplace, money should be periodically upgraded to keep pace with the world it inhabits. The current monetary system, following the decoupling from the gold standard, has remained largely the same for the last 50 years. Money needs an upgrade, and we've talked about this so many times in this channel and all other videos that we've done. I mean, it does need an upgrade, which is why cryptocurrency is the solution. And it is increasingly looking like, at the end of the day, at least in this guy's opinion, that crypto is at least a partial answer. Crypto assets have rapidly moved from a fringe or abstract topic to one that is openly being used by nation states, sought after by institutional investors, and interest to individual investors around the world. Recent votes and executive orders on both sides of the Atlantic continue to show that the regulatory and policy questions surrounding the sector are being debated at the highest levels of government. While headlines abound, and with good reason, it is important that the big picture is not lost. Crypto is here to stay, it cannot be canceled, and might very well be the future of money across the globe. Now, I think that's a very rational and very well-balanced summarization and final notes to this particular article and this idea around cryptocurrency and why it will never be canceled. But guys, I've been preaching this for years. Bitcoin cannot be uninvented. It cannot go away. It will never go away. And for everyone out there, remember, I brought this up because the context was investors or anyone investing. That's anybody. If you're investing, if you're in the game of investing into cryptocurrency, crypto can't be canceled. So just huddle on and huddle strong. Continue to build in the market. Continue to fund great operators. I mean, if you listen to one of my news bits about how the metaverse is going to be bigger than crypto, crypto is just going to be a tool, a payment rail system for the metaverse world. I mean, even if you just stay in one aspect of the metaverse, the financial side, the crypto side, you'll do exceptionally well. I'm telling you guys, I mean, sometimes I feel like, because I've been in this game so long, sometimes I feel like I talk about this stuff with such passion, but then at the end of it, I get depressed because, like, there's so many people that just don't know. This is the future. So smash the like button, hit the bell notification, share it, let your friends know, comment, subscribe, do all that stuff, guys, because it helps. Spread the word. Have a great one too, man. Crush it.